Good morning, everyone, and welcome to the European Cross-Up webinar. And we are seeing a slide here in the euro and also cable. We'll go and pull those up right now. We talked last week all about that key weekly level in euro. Here at the 2148. We'll go into that. There's that 2148 we had talked about, and we're actually below 121 now. So getting a little bit of acceleration here now. Look in the cable. Pretty good little pullback, and look, we've got from Friday we had posted this. Wouldn't call it necessarily a gravestone doji because the wick's a little bit long, but certainly opened the door for us to pull back lower, and we're right there coming into a support level here at 32.48. You will get a little bit of over. Well, we push those levels a little bit, but that is some support in here. So if short, you got to go on, and that's been an old level that we had before here, this 32.48. So good little pullback there, and we'll take a look at what we have as far as data. We did have a German industrial output earlier, and UK Halifax house prices, and at the bottom of the hour we'll have Eurozone Centix Index. But this is a pretty good little move here. In the euro coming down here, finally breaking 121. Take a quick look at the Aussie dollar. Also a nice little pullback here in the Aussie. Kiwi's been starting to show a little bit of a fatigue at these levels. See how that's doing. Oh, nice little slide there too. The dollar CAD may be a little bit higher. That's been the junk currency, or junk pair, I should say. And just a little bit off those lows. And we can take a look at where we stand here on equities. We did reach the 127% extension right on the opening on Sunday here in the Nasdaq. And you can see we're sliding a little bit lower here. Actually, just gently breaking this little trend line right here. And taking a look at the S&Ps. If you look at the 30-minute, we actually are generating a sell, and actually generating a sell here on the 30-minute here on the Nasdaq. And you can see here on these weekly levels, this is something that we talked about, is that even though the Nasdaq's at these new all-time highs, if you look here, and I put these out all the way to a weekly level, actually, to get a little bit better look on here. But we're up here, but we're not, if you look across the big eight, we're not here at new all-time highs, with the exception of Google and Tesla, which, if you look at it on a weekly, had posted a gravestone doji, not a gravestone doji, but a hanging man. Take a look at that. And it's actually happened to be at 161% also when it did post that hanging man. This is from last week. And if you look, it closed at 599. We look in the early hours, are just a tad bit weaker here. And why I think that we're just a little bit overstretched here in these indices, and we'll see if something happens today. With that, we'll just go on and touch on the news. Take a look at the sterling volatility. So measures of expected swings in the British pound over the coming days jumped to their highest levels in 8 months as fears rose that the British and European Union negotiators will fail to strike a deal before a transition period ends later this month. Implied volatility gauges for sterling overnight and 1 week's maturities jumped over 17% and 14% respectively as traders brace for more currency market swings. Elsewhere, the premium of pound puts to calls rocketed to the highest level since April, more than doubling over the past 2 weeks as traders hedge the risk of a no-deal Brexit in currency derivative markets. The European Union's chief Brexit negotiator, Michael Barnier, was rather downbeat about the prospects of seeing that a new trade deal with Britain is briefing in a briefing for the bloc's national ambassadors in Brussels. And on to the Aussie and Kiwi. Aussie and New Zealand dollars paused after vaccine-induced rally. Thus, Australian and New Zealand dollars opened the week broadly flat on Monday after retreating in the previous session from their multi-week rally that had been driven by hopes for a vaccine-fueled global recovery next year. The Aussie dollar, a liquid proxy for risk, was trading 5 basis points higher at 74.29. The Kiwi was 3 basis points lower at 70.38. Both currencies have rallied in recent weeks as investors chose to focus on the future prospects of the COVID vaccine and the ensuing global rally in risk assets. In Australia, the job advertisements jumped for a 7th straight month in November as the second most populous state of Victoria emerged out of its long coronavirus-induced lockdown. Its U.S. counterpart slightly weaker on Monday after soft U.S. jobs data solidified expectations of the fresh economic package supporting the antipodian currencies. As long as the U.S. monetary policy remains focused on actual inflation and employment outcomes rather than the forecast, the U.S. dollar weakness is likely to persist. This is just one factor that will contribute to the Asian currencies appreciating further, said Australian New Zealand dollar chief economist Richard Yestenga in a note. And then dollar near 2018 lows as traders eye more stimulus and sterling sheds 1%. The U.S. dollar remained near Friday's 2.5-year low on Monday as weak U.S. jobs data last week ignited heightened expectations of economic aid, while sterling sank as Britain and European Union made a last-ditch attempt to strike a trade deal. In the U.S., Friday's jobs data showed non-farm payrolls increased by 245,000, the smallest gain since May, a sign that jobs recovery is slowing due to the third wave of infections. The recent loss of momentum is a concern. It suggests that it will take longer to reverse the negative effect hit the U.S. labor market from the COVID shock, given renewed disruption from the third wave, said Lee Hardeman. Talks aimed at delivering fresh relief to gather momentum in the U.S. Congress on Friday as bipartisan group of lawmakers work to put the finishing touches on a $900 billion bailout. The final version of the proposed legislation is expected to hit earlier this week. In the current trading environment, the increasing speculation over looser U.S. fiscal and monetary policy provides the support for risk assets and weighs on the U.S. dollar, Hardeman said. So with that, we're just going to move into the analysis. So we're looking at the euro dollar, and the euro finished the prior week below the weekly pivot of 21.45. Resistance for Monday will be 21.73 with support at 20.51, because we know that, and you can see that support coming in right in there. So we're looking for this market to go and pull back, and that's what we're looking for is 20.51 on the downside. And respecting the move in case we start the week a little bit stronger. Just put it at the highs. And onto the cable. So cable closed the week with the gravestone doji, and this is, like I said, this is a little bit long, a little bit longer wick for gravestone doji, but that's probably the closest thing we could look at. It's not a shooting star because the wick would have to be much longer for this to be a shooting star. But cleaning stops above 135. Resistance to start the week will be 34.95 with support at 33.72. We give it the benefit of the doubt because the way this thing has been holding up, but you can see we've already broken pretty good chunk here. So we'll go out here with this key level. We're below it right now, but we'd say it'd have to be right there at 32.48. We are below it. You know, we had the highs at that 34.95. We're just going to respect that. Not that I think we're going to get there now, but don't want to go and say, oh, well, now it's much slower. But, I mean, it is at this point, but how we would have started the week, we will respect where it is right now. Certainly wouldn't say 33.72 after we've hit, but this is a key level. Now, we are below it, but like I said, you want to take a look at that and say, pretty good move. And you look at this body right here, that comes in at 32.38, and we're just a little bit lower. That would allow for this to push, but we'll go with that 32.48. Onto the Aussie dollar. So the Aussie closed the prior week with the Harami. You can see right here. Suggesting a stall. Resistance to start the week will be 74.50 with support at 73.75. And onto the Kiwi. So the Kiwi posted a decline on Friday, failing to get past Thursday's positive closing price. You can see here is Friday. Resistance to start the week will be 70.77 with support at 69.67. Onto the dollar CAD. So the dollar CAD finished the week at new lows again. Weekly support is now at 27.38 and resistance will be 28.36. And to the dollar peso. The dollar peso closed at a new weekly low. Weekly support going forward will be 19.59 with resistance at 19.88. And this is key weekly level, the 1988. We're pressing beyond that right now. Obviously, we're just getting some short covering. Market's exceptionally way overdone. So resistance will come in right there, which would be 20.06. Respect where it's at right now. And that was supposed to be 19.59. On to the dollar yen. So the dollar yen is stuck in a, I meant to say 100 pip trading range from 350 to 450. Support to start the week will be 364 with support at 452. And on to the dollar index. So the dollar index continues to languish at the lows. Support on Monday will be 90.28 with resistance at 91.12. Well, we're just above that. Once again, we're getting that rebound here. We'll take a look where we stand. Right there. And that's 91.23. We've actually, that's been a resistance before. So respect what's at 91.23. And stick to the 90.28 here. On to the Kiwi yen. So the Kiwi yen paired back to 73 cents before finding support. The pair is stretched and a further pullback is likely. Resistance will be 73.71 with support at 72.77. And on to the euro pound. Holy smokes, this thing really took off. Well, you can see right now we're at this key level, and that's 91.28. So that's resistance right now we're at, right? 91.28. We'll just respect where it's at. That's a pretty key level here, this 91.28. And we're above it right now, but pretty good volume against that level. And support, well, you can see we took off from this area, so support would be right there where that body is, and that would be 90.17. On to the euro odd. So the euro odd finished the week on its lows. You can see here we came down here, right there. Support to start the week will be 62.73 with resistance at 63.70. We're actually above that for right now. Oh, 62.73. And we're above that right now. But we'll stick with that 63.70 and on to the Euro Kiwi. So the Euro Kiwi continues to forge higher off the bottom. The resistance will be 72.83 with support at 71.24. And on to the Aussie yen. The Aussie yen managed to close the week above the weekly level of 77.10. Resistance is going to be 77.60 with support at 76.95. We're just below that, but we'll maintain that 76.95. Obviously, we're seeing some turnarounds here to start the week from these extreme levels. Let's go move into the guppy. Ooh, pretty good sell-off here. The guppy posted a gravestone doji. Now, this is more closer to a gravestone doji right here. To close the week, suggesting a pullback. Resistance will be 40.08 with support at 39.09. Obviously, like I said, with the moves that we had in starting today, it's really exacerbated that. So just like we did with the cable, you can see here this key level right there. Always you get a little bit of an overshoot, so you can just go right there with the bodies, and that's 37.95. And resistance right there, the body touches 39.98. And lastly, with the odd. Okay, the sterling odd push stops, but finished Friday near the lows. Resistance will be 81.60 with support at 79.87. Obviously, just like with all the other sterling pairs, we pushed some key lows. You look at the body, you see this wick up here, and then that body there, that comes in at 79.20. And on the upside, right there, that body, 80.88. And we're 20.84, so the euro continues to pull back a little bit further. And take a look at cable. We're still hovering near these lows, but right around this 32.48. then, as I mentioned, when we take a look at where we're at with the indices, specifically on the Nasdaq, we've been way up here in these new highs, and if you go and take a look at it on a daily outlook, we're way up here at new highs, and that's no news, but you can see here, well up here in these highs. But then when you look here across the big eight, you can see here, although we're up here, but and this is on a weekly chart, you can see we're not at new all-time highs. Look at Apple. Apple's probably the better one of the bunch, excluding Google. But you can see here, look, here's Microsoft, all-time highs or new highs, 232. Now, don't forget the Nasdaq futures are at new all-time highs. But look, we're still below that. And they work on a weekly chart here. Look at Amazon, 35.52. And look at that. We're $400, almost $400 lower here. Take a look at NVIDIA, 542, high 589. You know, what is it, $42 or something like that? Lower, or 45. Look at Facebook, same thing here. So when you look at this, now Google's the only one that's at these new highs. And as I mentioned here, when you look at Netflix, same thing here. The highs, 575, but we're trading at 498. So we're well off these. The one exception here also, as I noted here, is on Tesla, which did go in and reach, look at this weekly. And we saw two strong weekly closes, but Friday we posted a hanging man, and that's after reaching 161% extension. So we've really pretty stretched here, and I'm looking at the start of this week, potentially, you don't want to get ahead of yourself, but potentially it looks like we could see a pullback. And my thoughts on that is that and obviously that can have an effect for the currency markets, because then we may see the dollar coming to bid. But we're pretty well stretched up here. If we look on a 2-hour chart, you can see we've had this run up in here. Look at that. Way up here in the stars. And we did tag this 127% extension here. Here's another one from further back. So I'm trying to look at some type of confluence. But we did see the 127% extension. We kind of lingered around there for a while, kind of dipped back, maybe one more room here, one more run up here, and now we've dipped back, and this actually generated a sell signal in the 30-minute here. But my thoughts are that this last week we came back. Here was a Sunday, a prior week before, and we jumped back, came back on Monday, and then we moved higher. But look, for the balance of the week, we stayed stuck in this tight range. And you know, they're not going to go in and fight it, but I think that as we come in today or the start of this week, we need to see some further follow through. If not, I think the market would then be susceptible to a pullback. And even though there's all this good news, oh, everything's going to be fine because things are coming out with COVID. Well, here in the States, we've had the highest hospitalizations with 5 back-to-back increases, daily increases. And you know, you come in, everything looks hunky-dory, and then all of a sudden the market starts focusing on the glass half full. And I'm afraid that that's what we might find ourselves. We do have the Fed, and they're expected to provide some, possibly announce a bond buying program. But the thing is the market may find itself starting today saying, well, we may end up pulling back, and then the market may eventually say, well, we'll kind of hold on based on that, but little by little may start to drip, because now with some of these lockdowns, that's going to make things a little bit more tighter. And we've already come here where the market has really finds itself pretty well stretched here. So I think that that's one of the things I'm going to be looking today is how some of these equity markets react, because once again, the index is up here at new all-time highs, but you can see almost all this, the big eight, with the exception of Tesla and Google. And Tesla kind of goes, marches it to its own drummer. So the other ones, with the exception of Google, they're not. So you have to wonder, like, what the heck is the indices up here at new all-time highs, while all these stocks, including Apple's doing the best of all those, with the exception of, like I said, the Google, that make all-time highs. Then even that's not at new all-time highs. They're close, but they're not at new all-time highs. You could say the Nasdaq at 12,237 is close. It's not. Well, then that might be where if you were to look at the equities overall, this is probably where the Nasdaq should be trading, down here. And you look at that, that's 200 handles lower. So I think that's something I'm going to be focusing on today. But that's all we've got. Thanks for joining us here on the European Crossover webinar, and we'll catch you later.